Hello and welcome to the February 2nd, 2014 market overview. This is Mark with QuantumForex.com. Well, finally, it looks like we might be coming into some traditional patterns for Quantum Forex as far as harmonics and our 1, 2, 3 setups. So we're going to cover the Euro USD, the Aussie USD, which seem to be tracking somewhat together, the Euro Pound, and then the Pound USD, which will offset and give some meaning to why I believe the Euro Pound is going to do what it's going to do. And then also take a look at the US Yen. So the US Yen we've been tracking for quite some time, and we'll go ahead and look at that starting right now. Recall, please, that I did talk about an eventual retrace, although we're in a strong fundamental bullish move, and technically coming out of this triangle that I have no need to outline now, and we're expecting a move up. We broke the previous high. I was expecting that retrace, and as we've pointed out numerous times, where I would have expected that retrace to have occurred is roughly the 127, and we would pull, whether you call this the top of wave 3. Yeah, so this is about where the top of our consolidation started. We had what appears to be maybe an ABC involved in here, with maybe a little bit of an extended B wave, but you can see how pulling from top of wave to bottom of wave, we had that approximate area where we're expecting a retrace, being wave 1, 2, 3, 4, and 5. Now, if we also pull, let's see what Fibonacci levels are here. Okay, you can see at 200%. So typically what we look for is a 200 to 261 for the wave 3. And in this wave 3 we have wave 1, 2, 3, 4, and 5. So now what we're looking for is this retrace to be an A, B, and then a C wave down. And if you had just been tracking your bullish move with pulling your, tracking the Elliott wave 4-hour retracements, you'd be able to be out of this and possibly have pulled a bearish movement. But what we're looking for now is somewhere to the top of wave 2 for our retracement level. On the weekly, that looks about like so. Okay, so I'm going to give you two possible places here. We could also be looking at wave 1, 2, and then 1, 2, 3, 4, 5, and then this could also be what we're looking for, the top. So somewhere on these 2 points. Now let's do a retracement Fibo level. Let's do it from here, considering this as a whole move. There's a number of different ways to track Elliott wave, and you have to be able and willing to be flexible as things develop with some basic fundamentals in place. So here we have a 50% comes right to the top of what could be wave 1. Now we're going to do the same thing for this area, this being the top of wave 2. And that area comes between 50 and 61.8, and then we have 61.8. So the area we're going to actually target for a predictive reversal zone is this area right in here. Okay, now we've got those are retracement levels. Now we're going to look for an extension level. Okay, impulse wave. Let's go to the bottom of the impulse wave, pull it back to the beginning. Now if we drop down to the 4-hour, we can see this move and then a move down. So what we're going to actually do is call this wave 1, 2, 3, wave 4 consolidation, and then a move out the bottom of wave 3. So we're going to pull a Fibo level like so. And you can see that 127, 138% puts us right at the top of that wave. That's obviously going to be a strong support level. And then the 161 extension puts us down to the other area. So that both the 127, 138 and the 161 are relative to our retracement levels. So once again, confirming this should be a good area for a turnaround. So I'm going to go ahead and put that there. And I'm going to make it a different color just so I know that's my, let's make that blue actually. That's my smaller time frame, my 4 hour, and that's my extension. So there's a number of ways this can be played. If we get a retracement back up into this area, let's pull a Fibo top to bottom. Okay, we have a 61.8. It's conceivable to come back up into the 78 and get a bearish Gartley, at which point we have a great opportunity to sell, and that sell would then come down to, actually let's pull out a little bit. If we sold at the 78% here around 103.06, we'd have at least a 200 pip drop down to our first take profit. So we really should be looking at a short around the 78-88% if we get it. Okay, if we don't, you know, that's a little more intraday trading there. But if we don't, and it just drops from here, considers to consolidate, and then if we might have on a 1 hour a descending triangle. That's conceivable to develop and then break out the bottom. At that point, we could easily have a 100 pip, so you'd want about a 25 to 30 pip stop on that. This would be ideal leverage. If we can get back up into the 78, you can take that trade. Stops go slightly above, about maybe a 50 pip stop loss, and for 200 pip, that's a 1 to 5, or I guess that'd be a 1 to 4, 1 to 5 if we get down into the orange. So some great opportunities there, and then look for that turnaround. You can see the support levels there. This is the top of our weekly triangle. You can see how it dropped back down in this area. Great place for a buy, and that's about a 12, 13, 1400 pip right up. So you want to be watching that for sure. Okay, so we're looking about 100 to 200 pips bearish. Keep that in mind on the US yen. If markets are trending according to dollar movement and dollar strength or weakness, these majors, then we should be looking for the euro, the pound, and the Aussie. We should be looking for an overall bullish move over the next 200 to 300 pips, and while the US yen does a bearish move over the next few hundred pips. Makes sense, right? So let's go ahead and go to the Euro USD, and fairly bear chart, not bearish, but bear naked chart here. We're just looking at price action, and we actually have an opportunity, if we use Fibonacci, to find an harmonic setup. Notice how we came down into the 61.8, triple bottomed really on the lower time frames, and then retraced at least 38%. Clearly this is about a 61.8% retrace. You can see the 61.8 right there. Isn't it amazing how often 61.8s, 38s, 50s are respected in the Forex market, actually all technical markets. So what is our next opportunity for a trade? It would be a bullish at the 78%. Okay, that's going to be a Gartley. Okay, this is just a visual. These triangles mean absolutely nothing except for that's not what I want. Except to give you a visual of what we're looking at here. So doesn't matter if you draw these on, obviously, but they can be a nice visual. And then we'd be looking for, out of that, a buy, at least a 50% retrace of the BC leg. That would be a minimum, but typically these go to a 127 extension. from point A to, from the beginning this would be X wave in this case. AB to XA, if you want to call those legs, and that, let's go ahead and pull so we can get our entry, we can get our stop loss, the whole bit here. This is a trade you're going to want to look for. Obviously, I'm kind of moving right through this. I've had a little bit of practice on it. You guys who are watching might be new, you might be intermediate level. If you'll go ahead and email me, mark@quantumforex.com, which you see on these videos, I can help you get started, even if it's just with basic stuff. I'd love to help you get into harmonics and also 1, 2, 3 setups, and starting to understand basically how the market moves and how to catch the trades. It's not that it always moves that way, obviously. The last 4 weeks have been pretty rough as far as technicals go. The market's just been not really trending or responding well, and that happens. You know, you'll suffer some losses in your accounts, or possibly those that were real patient might have been break even over the last 3 or 4 weeks. But now as we start to get into these, you'll start to compound nicely in your accounts once we start to get into these patterns that are responding. So from this we could expect about a 600 pip move. Okay, that would be our second take profit. Our first take profit would be an A B to C leg retrace of 50%. That's where you want to take your first profit, and then after a retrace and a move to a higher low, you want to move your stop. But still, that's about 155 pips. Okay, so where is our take profit? It's wise on these to have 2 take profits, or even 3. You want to leave allowance for a spike down to an 88%, still finding support level at 78%. Spike, bam, back up, body closed above the 78. Technically you found support at the 78, the Gartley's still intact. But it is good to go ahead and have a stop under the 88, and then I put another stop under the 100. Okay, now if you want to go ahead and scalp in this, then as soon as you get a move up, say on the 5-minute chart, you get a retrace and a move back up, you can go ahead and put your stop below the lowest point, which theoretically should be at about the 78 support level. So you might, on a scalping where you're going to leverage a little bit higher, you might have a stop in here. Okay, but even if your stop went down below the 100%, and you just took a predictive buy right off the 78, that's 176 pips. 50% is 150. You're about a 1-to-1 for your first take profit, which isn't bad because most of the time these do go to the 127. It'll take some time, but they get there. If you don't like that risk to reward, if your first stop is at the 78 and your entry is at the 70, that's 78%. That's 86 pips for a 150 pip first take profit. That's even better. I like it better. So you can play around with these for your own money management and the risk reward you like to use, but we're just giving you some ideas and help you understand what's expected and normal. And I would then look for your second take profit would be this 127%, at which time more than likely you're going to get some retrace out of that. Okay, so that's the Euro USD, and it appears recall we talked about a 200 pip drop, but a possible move up first on the US yen. Well, if you have a move up first on the US yen of about 50-60 pips, what if then this responded to a move down of about 50 or 60 pips to the 78? At the same time this starts to move bullish, the Euro USD moves down 50 pips, then turns bullish, the US yen moves up 50 pips and then turns bearish. Now we have a convergence of charts of currency pairs where we're starting to get into sequence, and that's what we like to see. When that starts lining up, you start to get a little bit more comfortable about your trading, because it means that the markets are starting to synchronize instead of just being scattered all over the place. And that's what we like to see to give us a little more predictability in trading. So now we're going to add to this a convergence of the Aussie USD, and then we'll look at the pound, which isn't quite on the same page. And we're going to look at the Euro pound also. Okay, the Aussie USD has actually already done something interesting on the hourly chart. We're going to pull from swing low to swing high. Let's go ahead and zoom this out just a tad. Okay, we've pierced the 61.8 on this move down, but clearly found support level. Okay, we didn't even close below it, and then we came down and tagged the 78 and took off north. Okay, so that's a little bit of a preempting of where the Euro's at. Again, though, what happens if we move up some on the Aussie, and then when the Euro drops, the Aussie drops, and then gives us a nice 1, 2, 3 setup. Now let's bring in I'm not entirely convinced on this move. The Aussie has been not trending with the Euro and the pound over the last few months. But let's go ahead and bring in a momentum oscillator. And we use period 10. And what we like here is overall on the hourly we had price moving down, candles moving down, momentum oscillator moving up, and now we're getting what appears to be this Gartley 1, 2, 3 setup. B leg moving into the 61.8, C leg apparently coming to a 78. What I don't like about this is that as we move down on the time frame, we're not getting really much in the way until we get to the 15-minute. Here we get some divergence, but it's just in this last little bit here. Just in this last little bit we've got divergence. So I don't like it much, but you know, on the 5-minute we have some nice divergence. So if we had zero divergence on the 15-minute and the 5-minute, then it kind of cancels out our opportunity as far as giving us a leverage of probability. But we do have it, it's just not on the half hour or the hourly. So what we want to do is see this do a little performance for us. We want this first leg to move up and break this lower high. Okay, that's breaking a resistance level, turns the tide on the 5-minute and the 15-minute chart, turns the tide of the bearish move. As you can see right now, we are bearish. Until we break this area, which is our current resistance, we've broken the previous low. We are bearish on this in the 15-minute chart. So we don't want to trade against the trend. So we want this trend to break, and then we want to see at least a 50% retrace, which more than likely we would get a 61.8, which is going to put us about right in here, which is actually a double 61.8. So I would actually mark that on my chart as being the place I want to buy, because that's the hourly 61.8 retrace from this point, move swing high to swing low, that gave us our initial Gartley. A leg, B leg retrace, and then C leg coming down at 78. If we move up above previous resistance, previous support, which is, well, it's also resistance, and then a move back down, that'd be a great place to buy. Now we're looking for about that 50-60 pip move down on the Euro, and notice that that is 54.8 pips. If we get the break where I drew it to, again, we could have a 50 pip drop on the Euro, 50 pip drop on the Aussie. Then here's how convergence works. If we get to this area, our support level, we're looking to buy, and notice also how nicely that comes into support right in here. This is how you identify these and set them up in advance. If we get there and we are also at this level, which is our 78% on our our Euro USD at approximately the same time our Aussie hits it, bingo, and we've got divergence in both charts. That's really nice chart currency pair convergence, and it confirms our buy. Helps make it extremely predictive, and depending on your qualification terms, that could even constitute a qualification. Now back to the Aussie. This does seem to be a consolidation period sideways. It looks like we have wave 1, wave 2, wave 3, wave 4 sideways. We'd expect a move up. This is the top of our wave 3, bottom of our wave 2, puts our 127 to 138% zone right where I have this drawn, and could very well cause this resistance level then to break. That puts us bullish on the 15-minute, wait for that retrace, and then a buy. Very nice setup. You just got to wait for it. Alright, pound USD, not quite as pretty. If we go out to the daily, you can see we've got the zigzag coming down to a support level of the previous move up. Currently we are bullish on the hourly because we've broken the previous high. We'd have to break this low in order to become bearish. So we're looking for buy opportunities. That's how this system works. Until the trend turns bearish on whatever time frame, you can't trade bearish. You want to trade with the trend. If you do that, you're going to be in the flow of the volume most of the time. So what we're going to do is drop down to our 4-hour. We see this A, B, and possibly a C wave, or it could be 1, 2, 3, and we might blow out the bottom. We don't know. What we want to do is buy as close to the bottom as we can. If we also have divergence and we use our other indicators to tell us whether it looks like we're going to turn the tide, and then we can go down to the 15-minute chart, and if the 15-minute chart turns bullish and retraces, does our qualification, then we're good to go. So currently we've hit the 50. If this is going to become a harmonic pattern like we're looking for the Gartley, we'd be looking for a bat on this. And in order for that to be a bat, it's about 82 pips. Well, typically the pound, and not so much lately, but typically the pound will move 30% or so more than the euro. If the euro moves at 50 to 60 pips, 80 pips is not out of question for the pound. Okay, so we have a possible buy area right in here, and that would then be a bat. Let's look at the extension that we'd be looking at. Okay, that puts us right down at a 161.8% extension from end of A leg to the beginning of A leg, and that would be a very nice Fibonacci extension for a bat, for those of you who are studying harmonics. Again, if you need more information, want to know more about that, mark at quantumforex.com, and I'll get you hooked up on some course material, or at least point you in the right direction. So that's what we're looking for here. There's a number of ways to qualify this, obviously, if and when it gets there, but we're looking for that move back up. If we break the 88, break the 100, then we want to look for that retrace and then short, okay, because then that would mean this is not a C wave, but this then is a wave 3, and we'd look for a continual drop below, but we got to get below this, and you can see the nice support level there. If we were to break this at 1.6307, look at the drop that could be in store. Our next real support is down in this area, and if we break that, you've got a nice 300, 400 pip drop. What you want to then do is look, if we break that 100, don't try to chase the trade, wait for a retrace, back up into resistance, and a bounce off of that, and then short that. So that's the plan on the pound. Here's where we would look for the euro to move up faster, simply because we also have, and it's hard for you guys to see this. Let me zoom in slightly. So we've also done this. We've moved up on, I know this is a little bit cluttered, but I'm not going to clear it off. This is more of an advanced chart setup that I have. I've got all of my indicators down here. These are oscillator indicators showing volume, showing overbought, oversold, and they just help to qualify. And, well, actually they help for predictive on the larger time frames and help to qualify on lower time frames. But if we're looking at the 4-hour, you can see that we came down nicely. This is the 61.8% line. Look how we bounced off of that, moved up at least 38%, qualified this as a C leg, as a B leg retracement at the 38, and then a C leg. We've moved down and look at the rejection candle we have right now on the 4-hour. This is a bullish Gartley, okay, which is what we saw also on the Aussie USD. We're waiting for a bullish Gartley set up on the Euro USD, which is about 50 pips away. We're looking for a bullish bat on the Pound USD, which would indicate the pound needs to probably drop a little bit more, drop faster, so the euro pound would be going bullish if the pound is dropping faster than the euro. And then if they turn around and reverse and both of them go bullish, the euro and the pound, and the euro goes bullish faster than the pound, the euro pound is going to go up. And that is indicative of this chart. It looks like we're going bullish. Now if we break below the 88 and momentum's going down, then you want to be out of this trade and potentially look for a bearish opportunity. However, personally I would not. I would go back to my euro, my pound, and trade those instead of this one. But there could be a nice setup here. And currently what we're looking for is to qualify this. Okay, we've moved up. We want to move up farther and then get that retracement, that ABC retracement back down into this area. So this orangish area around 81.91 is where I'm looking to buy this if it gets down in there. So that's about all I'm going to go over on this. We're at about the 27-minute mark, but there is some opportunity on the euro pound. So, and confirming our bullish movement on the euro USD. So that's it. Hope you got something out of this video. Don't forget to email me if you have questions, and I will look forward to chatting with you soon. God bless.